Hi, this is Kerry Artek with Wicked Stocks, bringing you an individual stock pick in Rivian Automotive Incorporated, symbol RIVN. I did record this video on Wednesday, August 31st, the day it went up for free on YouTube. If you're not familiar with Wicked Stocks, just know that besides the one free video pick that we put out every week, stock pick video on YouTube, we do two others that are never seen on YouTube, and they're part of our premium membership on wickedstocks.com. You'd have to go to the website and sign up for that. You get 8 individual stock picks a week on wickedstocks.com, or I'm sorry, a month, that are never shown on YouTube, 4 a month on YouTube. So, you know, a total of what would that be? 12 a month if you sign up. Anyway, so this is the fundamentals, basic fundamentals, courtesy of Yahoo Finance, certainly a large cap stock. If you're not familiar with Rivian, they are an American electric vehicle automaker and automotive technology company founded in 2009. They build electric sport utility vehicle and pickup truck on a skateboard platform that can support future vehicles or be adopted by other companies. And that's as deep as I'll get into on the Wikipedia definition of Rivian. Let's move on to the charts. This is all weekly bar chart that you'll be seeing. This is the full scope of the existence from the IPO in 21. You can see it's come a long way as in terms of price extremes over the last couple of years. I'm going to zoom in here and show you, a rising channel bottom at the base of a move, and that is at 30.70. 30.70 is our support that can contain monthly selling pressures, say through September trade. That 30.70 rising channel bottom is rising 77 cents a week for the week of Monday, August 29th. So on a week-by-week basis, for instance, next week, it'll be 31.47, so forth and so on. And it is a base of support. From here, we can quite easily, over the next 3 to 5 weeks, rally back to channel resistance, which actually held a month ago. You can see we pierced through that channel top, but did not close above it. It comes in at 41.29 a week, 41.29 this week, rising 65 cents a week. They're not the exact same channel structure. I like to use extreme highs and lows, and so this is channel resistance that I say is in reach over the next 3 to 5 weeks, holding above 30.70, which I showed in a previous slide. So this, this is about a 30% move, perhaps, from present price levels if we hold that 30.70 channel bottom. This area is essentially expected over the next, I'm going to say 3 to 5 weeks, holding above 30.70. Now, the resistance area I'm going to call a band of resistance, because I've seen this many times before where we rally back up to the channel top, and if we cast a similar channel top that's an extreme channel formation that is at the same rate of rising 65 cents a week, but projected off that high from a month ago, this is sort of the safekeeping zone of resistance. In other words, were we to close above 41.29 at the end of any week, yes, we would have a valid buy signal, but in terms of more sort of follow-through reliability to the upside, I really think you'd need to wait for the settlement above 42.52, also rising 65 cents a week. So presently in the low 40s and climbing. This area, if settled above, 41.29, settlement above, valid buy signal, 42.52, settlement above, secondary buy signal that you may wait for. And under that scenario of closing above 42.52, and you may want to add the 1%, I know I'm kind of stretching this number out from 41.29 all the way up to 42.95, but it is the 1% violation, I think, that is important. If we settled above 42.52, and we settled at 42.60 or 65, it's still a little too close to call in terms of reliability's sake. But closing at 42.95 or higher at the end of any week should then yield aggressive follow-through. You can see this rounding bottom that's playing out that is in part defined by the channel structure, the top of which at 42.52, the bottom once again 30.70 that I showed in a previous slide, and I'll get back to that in a moment. But if we do close above this low 40s resistance area that I've already shown, then I think possibly within several months, you can see volatility now is certainly contracted. over the last half year or so, or the last 4 or 5 months. But there is precedent for a higher volatility dynamic in Rivian. And if we close above 42.52, I think that will reemerge. And within a matter of 2 to 3 months, perhaps, we could push into what is now at the low 90s. 91.69 is a descending 2/3 speed line that is based by calculating the spread between the 179.45 all-time high from November of 21 against the more recent May low of 19.25. I'm not going to get into how to create them here. That would take 5 or 10 minutes to really do it justice. But just know they're trend-defining elements and targeted mechanisms, sort of resistance areas, and I think it's realistic. It also is consistent to some extent with the 3/8 upside Fibonacci over the last, couple of years. That November 21 high against the May 22 low, 3/8 upside is 80.45. And you can see as we continue into October-November trade, that descending 2/3 speed line at 91.69 will be converging with the 3/8 upside. So you might as well just say that if we close above 42.52 or that formation in the coming weeks, then the stock may nearly double in value, as it, I think, would then approach 80.45 within a matter of 2 to 3 months by the end of the year anyway. I think that would be realistic. So this could be a good play to the upside if we settle above this low 40s resistance. Until then, this market is sort of plodding along just above meaningful support at 30.70. And if we close below 30.70, and once again, it should be by that 1% margin. So if on Friday, September 2nd, the week of October 29th, we close below the 30.70 rising channel bottom by the 1% margin, 30.39 or lower, this market sets off a meaningful sell signal that should play off over the next, it could be within 2 to 3 weeks. It could take the better part of 2 months, depending on volatility, of course. But if we settle below that 30.70 channel bottom by the 1% margin, I do think that 19.25 low from last May is in play yet again, and we should fall to it within 2 months of closing below 30.70. On the way down, the intermediate low at 24.48, I like that as a kind of an initial price point. That could be kind of a 1 to 3 week target, 24.48. That was a meaningful week. If you look at that chart, it was a reversal week. We put out a new pullback low over the previous 4 or 5 weeks, and we settled above the preceding week's high. And that set off, I think, that this rally that we saw up to the high that commenced about a month ago. So closing below 30.70, 24.48 becomes a 1 to 3 week target, 19.25 kind of a 5 to 8 week target, maybe sooner. We could double bottom at 19.25 in a meaningful way, possibly through the rest of the year. I think that pretty much rounds it out for this particular stock pick on Rivian Automotive. Don't forget, wickedstocks.com offers 2 more of these every week that you never see on YouTube. We post 1 a week and have for about 2 years now. So there you go. I hope to see you on wickedstocks.com, and that's all I have for this particular stock pick video by Wicked Stocks.